Hi, everyone. Welcome to another episode of Money Monday. I am, as always, your friend in finance, Henry. Before I open up today's Money Monday, I just want to say thank you first because I have people have been coming up to me and asking me questions about finances and what's going on in the world. And even though I can't necessarily give specific advice, I can help by answering, just teaching what something like today's topic, the Fed interest rate, what does that mean and what effect does that have on people's lives? So keep coming up to me with questions like that. I love questions, though. Those are fantastic. So I welcome any and all that's going to inspire a future. If you have a question like that, that's probably going to inspire a future Money Monday. I already got a few more episodes lined up with topics from conversations that people have had with me. Today, like I said, we're going to be talking about the federal interest rate. What does that mean, and what effect does that have? Does that have on your life? So I'm going to try to boil this down as much as possible. The Fed interest rate is the rate that the Federal Reserve lends money to banks. So if the bank wants to borrow money, the Fed just raised interest rates last week. So if the Fed wants to borrow money, they're going to have to pay an interest rate to the Fed in order to do that. The reason why the Fed did that is because the economy was, I mean, we've all experienced it. There's a lot of inflation going on right now. So the Fed raised interest rates in order to try to just kind of lower inflation because we're going to be spending less money at that point. How does this all affect us? If the banks were able to borrow money for basically free for about like 0% was the goal. Banks could borrow money for basically free, then they could turn around and lend money to us, to normal people, at a much lower rate. That's why we were seeing mortgage rates that were like 2-3%, things like that, really low car loans, all those kinds of things. Any form of lending was really low. Now with the Fed rate going up, the banks are going to have to raise their interest rates in order to keep making a profit. That's kind of the knock-on effect that it has. The reason why the Fed does this is because it just ends up being more efficient, because then that way the federal government doesn't have to worry about becoming a bank to us and having that infrastructure. The Fed is also it's just a way for the government to nudge us towards certain behaviors. In this case, the Fed wants to stop us from spending as much so we can bring down inflation a little bit. How does this bring down inflation? How does inflation work? That's a pretty big topic I'm going to try to tackle really quickly. When we spend money, we are actually we're basically, think of it like we're increasing inflation out there. Why? Look at this scenario right here. This is village people who hoard. Everybody here has $1,000. The total value in this village is $10,000. If suddenly people start spending, then at that point, we see trade going on, transactions. Each one of these lines represents somebody buying something from somebody else, either an item or a service. With these 10 transactions, suddenly the money's out there. It's moving around. You could say things like, "Hey, I'm good for this. Bob just bought $1,000 worth of supplies from me. So if you sell me $2,000, I'll pay you what Bob's going to give me." Suddenly, with the money flowing like that, suddenly more trade is able to happen, and the value actually ends up going up. You can see that's inflation. The Fed always wants a small amount of inflation in order to keep the economy stimulated. Right now, we're experiencing high gas prices, all these things. And because that inflation is really, really high right now, that's what we're experiencing. Inflation's gone way up. The Fed wants to try to calm everything down, so they've raised interest rates. What's going to end up happening is that investors are going to stop putting money into stocks, because suddenly bonds and things like that, like more like lending products, look more enticing. So they're going to pull away from stocks. They're going to put it towards bonds, and that's going to end up balancing out the economy a little bit more, is the idea. I'm just going to take one quick moment right now also to address one fear that I've seen coming up. People are afraid of a recession, the R word in financial circles. The recessions do happen, just like bear markets happen about one every 3.5 years. Recessions do happen from time to time, so it's not something to be terribly worried about. If you're looking at a recession and thinking, "Oh my goodness, there goes my retirement," that's probably a sign that your asset allocation for your retirement is not correct, then you might want to talk to a financial advisor in order to find out what would be a better asset allocation to protect you from things like that. The reason why I'm not too worried about a recession, though, I mean, even Biden came out and said that it's a recession is not inevitable. Just because the stock market's going down doesn't mean that there's going to be a recession. There's the financial economy, and then there's the real economy. I'm still seeing lots of people spending a lot of money. For instance, you can go to Disney and see that I've heard that their Star Cruiser, their Galactic Star Cruisers booked out for months. So people are still spending money, and that's a pretty good leading indicator to show that people still have money to be able to keep the economy running. On top of which, a much bigger fear would be that inflation would run too rampant, and then we would have what's called stagflation, which we had in the 70s. So I do see the reason behind the Fed doing what it's doing right now. And I think in the long term, so long as you got a solid financial plan, you're going to be able to come out ahead through all this. If you're worried that you don't have a solid financial plan, or that your retirement accounts aren't actually set up to help protect your retirement income in the future, please reach out to me. It's something that I can help people with. I love helping people with making sure that our finances are also lined up with what our goals are. So please reach out to me. I hope today's Money Monday helped allay some fears, help give a little bit of an understanding about why the Fed's doing what it's doing, what raising that interest rate, what kind of effects that could have on your finances. Thank you so much for joining me for Money Monday. I'll talk to you all soon. Bye.